Prepared the same way McDonald's and Burger King get prepared. They are the same store, but the products are a little bit different. The consumer's a little bit different. One's a little bit bigger. One has more stores. In the sense of this too, they're a lot a bit different. Target and Walmart have completely different kind of value propositions. Target is seen as this, somewhat relatively priced quality in-person experience for discretionary items, and then there's also some groceries there. Walmart's a grocery store that also carries things like TVs if you just happen to need it because you're there.
That is exactly what I was going to say. I feel like there's such a distinction, and I don't want to say
focus on that for groceries. The Great Value brand is at least that's how it was when I was in Walmart's more frequently, let's say the better part of 10 years ago. Target's more focused on the discretionary items for their own kind of Target labeled stuff. Is that fair?
It is fair, and I think that private label component of Target is actually a weak spot. I mean, look at Bed Bath & Beyond, who basically admitted their private label helped to drive this seeing strength in other areas of the retail market.
And to be fair, are we even seeing strength there? Do those items just cost more and you have to buy a fixed amount? Your car doesn't suddenly just need less gas because the gas is more expensive.
Right, and you still need to eat. So we do that. That's the grocery component that I mean, they do. Target does have a grocery component, just not in the same way that I think about Walmart. And clearly Kevin depicted that, saying, we see 2 times as much grocery sales from a Walmart. Walmart also has that Walmart Plus component. Target doesn't have that. Target outsources their delivery to Shipt. I mean, the difference is I could just go on and on and on. And I've been in both stores. It's just a very different experience. And to me, I'm not surprised by the market reaction today.
Yeah, no doubt. Obviously set up for a little bit of a plunge given its run up yesterday in sympathy with back to kind of the trading activity that you saw before. A little bit of up, a little bit of down as it works its way in ebbs and flows of the overall market. So we're looking at a strategy that would benefit from sort of this ping pong action of the everyday market that we sort of see. And that, of course, is something in a range bound family, or as we know, selling an iron condor. And so that's what we're looking at here, Jenny, is going out. This is the neutral range bound version of this. If you were more neutral to bullish, don't use that call vertical side. If you're a little bit more neutral to bearish, maybe don't use the put vertical side, or adjust the strikes to better get a risk reward that's comfortable. But this is sort of combining 2 building block strategies, making something a little bit more complex. So obviously there's four legs to this, Jenny. Risk on both sides, but also highlighting that you can be neutral. That's a strategy as well.
Right, and I think that's very well put. And I think our risk tolerance here also does consider the fact that we do.
Alrighty, welcome back to Next Gen Investing. It's time for an earnings preview, and what some may say is arguably the most important earnings event left on the calendar. I would say the collective of the retail names this week overshadows the importance of a name like NVIDIA, but from a single company standpoint, I think you can make a good argument that this is the biggest, most important company left to report for the duration of this calendar.
I would also say NVIDIA is probably one of the most important companies to report this quarter. I mean, this is such an important company, such a good read. Expected to be another consistent strong point for this company, Alex.
Yeah, the data center side, of course, is not going to be with that process. It becomes more and more difficult. So you look at that from the consumer standpoint, there's probably some fatigue for some of these products, but the data center business is perceived to still be doing pretty good, and hopefully enough to offset any perceived weakness we see anywhere else. And
it does seem like, at least so far in this earnings season, that we have seen some of these low.
Best reason for a stock price to go up is just simply because it's gone down so far. And in many ways, we've seen that with a name like NVIDIA that's already rallied like $50 off its lows. But we're taking a short break. We get back, it's time for Under 30, and we're going to talk another tech company that I don't know if we've ever talked this, believe it or not, but we're going to talk